Hello and welcome back to Dukas Copy TV. Now, banks in Europe and Asia are bullish after recent news that Spanish banks will receive up to 100 billion in euros as part of a bailout fund. Of course, we don't know the exact figure yet, we won't know for a few days, but some people are still calling for a more European banking union. Well, in the studio with me once again is Dr. Frank Hollenbeck. Frank, thanks very much for coming once again. Frank, let's start. Banks, there's some talk amongst analysts that some banks could be hiding losses. Do we think that a banking union will help lessen the blow of bailouts for the future and, of course, perhaps build up better trust amongst banks?
Well, this idea of a banking union would mean basically that instead of having the Spanish taxpayers bailing out the Spanish banks, it would be the European taxpayers bailing out Spanish banks. But that's what's happening anyway, okay? And this idea of a European banking union, for me, is a bit funny because even if this banking union had been in effect, let's say at the beginning of the euro, we wouldn't be any different position than we are today. In other words, we would have the same housing bubble in Spain had we had this European banking union. In other words, look at Bernanke. He basically said in 2007 that he didn't see a housing bubble in the United States. Do you really think that bureaucrats in Brussels would have had a better view of what was going on in Spain during the go-go years, the 2000 go-go years? Of course not. So we wouldn't be in any different position than we are today.
So Frank, where does centralized banking regulation fit into all of this?
Well, again, we're trying to control banks. At the moment, we have more compliance officers than we have loan officers. And the basic problem is that we have what I would call a fraudulent banking system. And it all goes back to the 17th and 18th century. We used to have two types of banking. We used to have deposit banking, which was very similar to you putting furniture in a warehouse and you got a ticket for it. In other words, you were certain that your furniture was there. We also had loan banking, where you got paid in interest, but you knew your money was being given to somebody else and that you couldn't get this money for a certain amount of time. Okay. What happened in the early 1800s is that we had the creation of a commercial bank where we basically merged deposit banking with loan banking. And obviously the people who were doing loan banking had a great incentive to go in and take deposits and loan them out, which was actually illegal back in the 17th and 18th century. And you could actually end up swinging by a tree if you actually made a loan out of a deposit. Okay. And what this did is by being able to do that, the commercial banks were actually able to create money. And obviously the governments very quickly decided, oh, this is a great source of financing. And for a large degree, they made fractional reserve banking legal. And they set up laws like Foley versus Hill, which basically states that when you deposit money in a bank, it's no longer your money. It's the bank's money. And they can do anything they want with it. They can go to the casino and play with it. It's not fraud, which obviously it is. Okay. Now, what happened during the 1800s is that in England and in the US, they did try to separate deposit banking and loan banking because they recognized that it was a fractional reserve banking system that was leading to these booms and bust cycles. But because they didn't separate commercial banks, in other words, commercial banks continued to exist, commercial banks were able to circumvent these new laws. Okay. What we really needed to do was to separate the two. The Federal Reserve System was actually created following the panic of 1907, which was due to the fractional reserve banking system. And the Fed was there to basically counterbalance the negative impacts of fractional reserve banking. But what happened is it ended up doing just the opposite. Okay, and we've had some of the worst crashes, worst booms and bust cycles, 1929, 2008. Now, what we need to do is something that our ancestors did not do. We do not need a European banking union. What we need to do is to separate deposit banking from loan banking. And once we've done that, we will no longer need a Federal Reserve System or a central bank. Okay? And only then will we have created an environment that is relatively stable for our children. And that's really the most important thing we should be doing.
Well, Frank, and we could probably talk about this for a long time. And actually, I wanted to ask you later on about deposit insurance, but I think that's all we've got time for.
That's an interesting issue.
That's very nice of you to come in, Frank. Thanks very much once again. That's all we've got time for here on Dukas Copy TV. Of course, we'll be with you throughout the week to give you further updates and interviews. Until next time, though, goodbye.